listening to the Mindset Advantage podcast with Elliot Rowe and Dr. Tricia Gardner.
So welcome to the show. So Tricia, what do you have for us this week?
Hey, I got a reader question on Twitter that I wanted to kind of go over because it relates back to our Olivier Bousquet episode number 2. If you guys haven't listened to that, do tune in. But I talked a little bit about a study that showed that if you do some napping, it helps to improve memory because it consolidates learning and that sort of thing. So the question came in related to that and says, do you think the same results would occur with meditation? And look, I'm getting reader questions even as we speak coming through. So anyway, does it work with meditation as well? And a couple of studies that I have seen on that, they really have to do with working memory. And working memory is sort of like your brain's scratch pad or notepad. And what we do is we put information there and it's kind of like a temporary storage spot. And you guys have probably heard that you can hold 7 chunks of information. That's kind of a pretty standard thing in your working memory. So we use it every day. It's super important. And what happens with the information there is either we're going to put it to our long-term memory or we're just going to forget about it. So like maybe we're going to call up for takeout and we remember the number long enough just to get the call made. And then after that, we forget it. We don't put it into long-term memory. Well, research is showing that if we take people who have no experience in mindfulness meditation and we teach them, to do it, they can improve their memory recall in just about 8 weeks. So meditation, because it has the power to help us concentrate, it's obviously going to improve memory. And specifically, it looks like it helps with that working memory. So I think it's not exactly the same as the consolidation of learning that comes from napping, but it's still pretty good stuff. What do you think, Elliot?
Yeah, yet another reason for our listeners to be meditating.
You got to improve your mind, right?
Yeah, just keep going, guys. As we say, meditation is just so good for your poker. It's really worth investing your time and effort into. So this week we've got Adam Sherman coming on. He's a former professional poker player who had success playing online MTTs, who actually moved to become a Wall Street trader, and he's going to talk about that transition and the differences he's noticed between trading on Wall Street and being a professional. So let's give Adam a call. So hey Adam, thanks for coming on the show. If you could introduce yourself to our listeners.
Hey guys, my name's Adam Sherman. I was a professional poker player for about 4 years. I played multi-table tournaments. I did a pretty good job with those. A lot of it was studying math, game theory, and really taking advantage of all the statistical software out there and learning how to apply that all to being a successful poker player. About 2 years ago, I made a big switch and I moved to New York City for a job opportunity as a trader at a proprietary trading firm. And I've been doing that for the last 2 years. And I found that it was much more comparable to poker than I initially thought it would be. And a lot of similar ideas of understanding the math, understanding game theory, understanding the psychology of your opponents, and most importantly, constantly getting yourself in the right state of mind so that you're not making mistakes is of crucial importance to making money.
So for any of our listeners who are thinking, hey, I'm a poker player and I want to make a career as a trader, what kind of tips would you have as far as, how could they make that transition?
I mean, it's mostly preparation. I'll be honest, I've talked with some poker players who wanted to make that transition since I've done it. And a college degree is a necessity in this field, unfortunately. It's really important that you brush up on brain teasers, mental math, and being able to describe your poker experience in a manner that if this was a learned skill that you have mastered, that it's not random, it's not gambling, that these are the steps that you took to be a successful poker player. And then this is how you see yourself being able to transition to be a successful trader. I think that backstory is really critical to getting a trading firm to consider you.
And do you think that was a key part of you getting a job in a trading firm, was the success you had previously had in poker?
I think the success I had in poker was a big factor in me getting a job. I think really talking about how I wasn't that good at poker and I moved in with a friend who was a professional poker player who taught me a lot of what he knew. And he taught me how to use these programs that I hadn't used, and I started exploring the math on my own. And in my free time, I was observing, all these other poker players, the best in the field at the time, Ape Styles, Gboro, like the people who were the best at what I was doing. And I was just taking notes on them and trying to learn from them. And that I viewed, my transition to trading is, I know what it's like to start from the bottom, to start from not knowing anything, and how to take advantage of that experience. So to be at a place where there are so many successful traders, so many bright minds, I felt like I would be well positioned to be able to make that transfer from poker skills to trading skills.
It's interesting because we had Olivier Bousquet on recently, and he started out as a trader and then became a poker player. So you're kind of the opposite.
Yeah, there's definitely some two-way flow, as we would say in trading.
Yeah.
So they had talked to people in the New York office who had become poker players after starting out as traders. It was right before Black Friday, so I can't imagine that went as well as it could have. But I definitely talked to poker players personally before I made this switch and asked them what they thought about it, why they quit poker to pursue a job in trading, and how they thought about the entire idea. I won't lie that, being a poker player has advantages that being a trader will never have. You have set hours as a trader. You have outside responsibilities. You have a boss. You have a team of people you work with. How much you make is not as directly correlated to how much you get at the end of the year as if you're a poker player. You're working on a team. You have to be cognizant of that fact at all times. It's no longer you versus everyone else.
That's really interesting to hear you talking about more of this, view that maybe people who haven't been in the trading world, like they would never think, oh, I'm working with the team, as opposed to, just an individual type sport. So besides that, what kind of research do you do, or do you do research in terms of the trades you're going to execute?
There's a ton of research involved. So I trade options. The determining factor for price of an option is the volatility, how much it moves essentially. And by looking at how much the price says it's supposed to move, as opposed to how much the underlying contract, whether it be a stock or a commodity, actually does move, you can determine if you think certain options are expensive or cheap and what kind of trades you want to put on based on that. There's a ton of data mining, there's back testing, these are all factors into becoming a good trader. There's research into what the other market participants are doing. So you can determine, you don't want to get in at the start of a trade when someone's going to buy 100,000 of one thing. You don't want to be the first price there because it's going to take multiple prices. You might buy 5,000 the first day and over the week buy 15 or 20,000, but it gets more expensive and more expensive. So you have to be cognizant of, okay, I don't want to be way behind at the very start of this and then not be able to add on to a trade when things are good.
And how similar is the pressure on mindset-wise between trading and poker? I mean, did you feel any of the similarities as you switched?
Opportunities are very similar in poker. So when you have a particular hand against a particular opponent and okay, this is a really good situation for me, I have to figure out how to play this optimally and take advantage of it. It's that same idea with trading, is that trades will pop up during the day as very limited opportunities. They can last from anywhere from less than a second to maybe a minute or two, but the really good trades won't last longer than that. And figuring out, okay, that this is a risk worth putting on, especially in the context of everything else that's happening. So maybe in terms of what's popular in poker today, if people have been 3-betting the button a lot, if people have been calling from the big blind and folding too much or check raising too much, okay, this is how I look at this opportunity, and this is how I'm going to take advantage of it in the context of everything that's out there. There are a lot of similarities in that respect. I don't know if there's as much direct control as you have in poker. I know most poker players will agree with me. They don't have as much control as they would like over the game. I'd say the biggest difference with trading is good trades will eventually come along. And I guess it's similar with poker in that a good hand will eventually come along, but there's no pressure to be very aggressive, to make a lot of trades just so, you feel like you're doing something. It's about making the right trades at the right time and picking your spots. I don't know if I got a little off track there. Sorry.
And it sounds like no need to worry about being balanced or anything like that, like you would at the table, because obviously you're just looking for the best spots and then taking those spots.
Yes, to some degree. However, there is this necessity of not overloading on a trade, that even the best trade, you'll need to have these contingency plans. You'll have to know what your limit is. I mean, a big analogy for me is, there are some of the best poker players in the world out there who are broke because they have no bankroll management skills. They'll win $300,000 and then they'll try to play, they might be tourney players and they'll go play the best players in the world heads up or in a six-handed cash game, and they'll blow all their money doing things like that. And that's just bad risk management. And it's the same thing with trading, is that you can't just put your bankroll on the line or put a huge percentage of your bankroll on the line. You have to be constantly critical of that, and that you want to set up a balanced trade, to be honest. You want to set up a trade that says, okay, if volatility goes crazy, if everything starts moving rapidly up and down, I want to be somewhat protected. If everything doesn't move for a while and everything gets really cheap, I want to make sure I have some protection against the premium that I've outlaid. So there is this idea of being balanced in your position, and the trades you make will eventually lead, hopefully, to a balanced position. If you want to put on a particular viewpoint, that's a different kind of trader. It's like someone who's willing to always play it. If he thinks he's the top, he'll always play at the best games, and he'll get knocked down again. But eventually, if he's good enough, things will work out. So there's that same idea of, I'd say the best way to consider being a balanced trader is looking at bankroll management in poker.
It's so interesting because we've had a lot of, very good players on, and inevitably they always talk about bankroll management, but then you'll see lesser players that maybe they don't seem to give it as much credence. And then to hear you saying this just kind of even confirms it that much more to me.
The question is of whether or not they're lesser players is really interesting, because I know there are some players who didn't end up as successful in poker as I did, not because they were worse poker players, but because they always wanted to be the very best and they wanted to compete with the very best. That was never my goal, because I knew taking that would lead to extreme risks, that would lead to playing in situations where I don't have an edge. And so it's not that they were worse at actual poker. I still think they were better than me at actual poker. It's just that in managing their own careers, their own kind of finances, they didn't understand the fundamental background information.
And I mean, that is obviously a skill in itself, isn't it? The understanding of
it is. It's the most important skill, I would say, is being able. It doesn't matter how good a player you are if you don't have good risk. Same with trading. It doesn't matter how good a trader you are. If you don't have proper risk management, you're going to end up broke.
And in terms of your poker, if you could just talk about some of the successes you had on the table prior to switching across to trading.
So my second year playing poker, I won a couple of spring championships of online poker for a few $100,000. I final tabled a lot of the big tournaments on Stars, chopped the Sunday Million, won the Sunday 500 a couple of times, probably about 10 scores over $50,000 in my career. Nothing more than $250,000 though. But a lot of what I was doing best was I was playing these high-value tournaments like the $11 rebuy, where first place is never going to be more than $11,000. But if I'm making $33 every time I register for an $11 tournament, I would just grind out consistent profit. So when I would look at some of my peers in the highest stakes tournaments, they wouldn't be playing a lot of what I considered the highest value tournaments, the best return on investment tournaments. And that was something I definitely think I did better than a lot of people, was that I would find what I thought were really good value, and I wouldn't care if I wasn't going to win, more than $10,000. I could win $5,000, but if I thought I was making 300% or 200% return on my investment, I should be in that tournament every time.
We have had a couple of people on the show who basically said exactly what you're saying right here. And I think it's so important that, the listeners really grasp this concept that it's not about, how you look. And it sounds like what you're saying is that too. It's not like the ego part of it. Like you have to set that aside. Is that kind of what you're thinking with this?
Absolutely. You can't think, okay, I won this $2,100 tournament for a couple $100,000. I'm not going to register this 5 quad, which is like a $20 tournament, to try and win $2,000. that's crazy. If you're gonna make $60 every time you put in this $20 tournament, you're not going to have that kind of consistency at the very high stakes. And I remember when I realized there was such a big distinction between me and other poker players during Black Friday. Was Black Friday came around, and basically all these online poker players I had talked to in the US were like, oh, we're going to go to the World Series of Poker, and we're going to, take the money we got from Stars and try to win something there, and then we'll figure things out after it ends. And my perspective was like, okay, well, first off, all of us lost a lot of money on a couple of sites. We don't know if it's coming back or not, so our bankrolls are not what they were. And this is like the rare time in poker where all these professional Americans can no longer play during a couple of the biggest series in the world. And then when the World Series rolls around, all these top European players, these top South Americans, they're all going there. So I moved out of the country immediately, and I skipped all of the World Series of Poker except for the main event to go play online. And it was, I rebuilt my bankroll by doing that. I made, $20,000, $30,000, but it was consistent, and it was some of the easiest poker's ever been. And so it's kind of, you have to not have an ego. You have to be willing to say, you know what? I just took a big bankroll hit. I don't need to win a bracelet. I need to make sure I don't take a further bankroll hit. I need to drop down in stakes. I need to rebuild. That kind of objectivity into what your poker career is like is really important.
And did you take that into consideration? Obviously very successful in poker, and then this opportunity comes up in trading. Is that same sort of mindset of sort of minimizing risk?
I'd say that was a factor. I definitely was getting, as a tournament player more than a cash game player, I feel the downswings can be longer, and then you have one big score and you feel really good for a while, and maybe you lose a third of that over the next 2 months. But it's painful to be doing that. It's not an enjoyable process. But to be honest, I think the main switch for me was poker was getting harder. There were some things morally that I wasn't particularly comfortable with in the game. And I felt like I wasn't striving to be the best poker player I could anymore. I had reached a certain amount of money every year that I was comfortable making. And I never thought I was going to be the best. I was never going to put myself out there and take the risk required to be the best. And with trading, it was this new opportunity. It was this new game I could learn. And the potential rewards for being very good at trading were just much higher than the potential rewards for being very good at poker. I knew the competition was going to be tougher, but I definitely saw it as an upgrade and opportunity.
So just as, I don't know, for everybody who's listening who's like, what is the training process like? Can you kind of go into that? So from the time you get the opportunity to be a trader, what was then your sort of education or training like before, you actually started trading?
So I knew I was going to be trading options. So most of it is involved in, it was like a month-long class of how to trade options, what option volatility means, what realized volatility and implied volatility, and how those factors react. What are the break-evens of a trade? Where do you start making money? Where do you start losing money? Where have you lost nothing? A lot of behind the math of it, but a lot of practical trading lessons that you get from the people at the firm. Like, this is what happened. This is how we dealt with it. This was my best trade. This is my worst trade. This is how I learned from both of those. So there's a lot of good practical advice. And then you're not going to get in there and start trading immediately. You'll be doing, to put it, I don't know a better way to put it, kind of bitch work, because you'll be the newest person at the firm. And originally I was getting into the office like 5:45, 6 in the morning to put together risk slides and implied volatility sheets, skew sheets, all of these factors that senior traders will want to look at when they come in to see, okay, how has this changed? What kind of incongruities can I find in these sheets that make me think, okay, this is a trade I want to put on? You'll be doing trade entry like for a lot of the time. But the best thing is if you find someone who's really good at trading to work with, you can just constantly, at least the people I've talked to have all been very open about, they'll tell me why they made a trade, why they like this trade versus another trade. And that's what my first 3 to 6 months were, until I finally started spotting some good trades on my own and started trading electronically, which was relatively underdeveloped in the market I'm trading in, and no one else was really interested in that. So I kind of found a natural spot as an electronic trader.
That sounds like so interesting and yet kind of intense in a way as well. So for people who are interested, you're going to have some work in front of you, but it's nice to know that you were able to, find a spot and kind of, really just get going. And I guess 3 to 6 months, that's not too bad, is it?
No. And you're not ready to trade in the first 3 to 6 months. It would be like, and then even when you start trading, you're not ready to trade for size. You want to make trades for, I was making, maybe the standard trade at our firm would be 500 of something or 250 of something. But when I first started trading, I would just do 25 or 50 because I just terrified because you do 200 or something, the trade goes against you. That's a lot of money potentially, like tens of thousands of dollars. So
a lot of poker players will talk about, if I decide to leave poker, I'm going to work from home. I'm just going to be a day trader and trade currencies or trade stocks from home. What are your thoughts on that? Because you're talking about the experience you needed, all of the help you've had. Do you think that's something that people can be relatively successful in, or is that pretty high risk?
I would say for the average poker player, or even for the successful poker players, you're taking a high risk game. Everyone who is not a particularly, because you have to realize the people you're trading against in a stock, the people you're trading against in a commodity, a currency, these people are doing tons of research and they have resources a bit, like they have a Bloomberg terminal. They've been compiling reports. They have back-tested strategies. So while I think it's very possible to be successful because there are trade opportunities that pop up in every different market, to assume you'll be good at them or you'll be able to easily transition, I think you're crazy. I'll tell you right now that I have a personal account and I tried stock picking and I picked maybe 15 stocks and maybe 4 of them or 5 of them have done better than the S&P 500. But the rest have done far worse or significantly worse. And to the point where if I had not tried to pick any stocks and just bought the S&P 500 index, I would be up more money than I am personally trying to analyze a stock and saying this is underpriced, this is overpriced. And I think I'm a smart guy. I think I do research. And I am convinced that I am not a particularly profitable stock picker. So I would find it hard to believe that the average poker player would be able to retire and do day trading and do it profitably. And trying to subscribe to these emails, to these newsletters, to training classes online, it's my personal opinion that almost all of them are scams. There's no stock. I mean, maybe someone will tell you to buy Amazon, it goes up 100%, but there's no hot stock picker that's ever emailing out his recommendations. If he's a very smart guy, he gets hired at a place with a lot of resources and they buy 1 million of it. They're not trying to get $50 a year subscribers to a newsletter. That doesn't exist.
Yeah, and you just told us the secret. Get yourself an index fund, right? You just told us.
Yeah. I mean, I've been arguing with poker players for years that they should not buy as much Bitcoin and gold, and they should just put as much as they can in their IRAs and buy index funds, diversify a little bit. You don't have to buy all the S&P 500. You can invest a little bit in Europe and a little bit in Asia in these diversified funds, which are very low. I mean, they're not low risk because when the stock market goes down 50%, they go down close to 50%. But they're as safe as you can get. And over the long run, their returns are incredible. And if you look at professionals, the top people who are doing this, the large mutual fund money managers, medium, small, about 75% of them has underperformed the S&P 500. And I mean, that's a factor you have to be like distinctly aware of. And that the other 25%, you might say, oh no, but those are talented people. But some people are just going to outperform based on luck for a very long time. And that if you look at the studies, the people who did the best in the last 10 years don't usually do the best in the next 10 years. The correlation's almost zero. With exception, there are people who can do this, but they are the Phil Ivies of the investing world, Patrick Antonio, they're Fedor Holtz and those guys. They're not the average person, and to think that you can all of a sudden become one of them.
Yeah, but the problem is it's not as cool as Bitcoin, is it? Buying an index tracker.
No, it's not as cool as buying gold and thinking everything's going to collapse. I personally have a small amount of money invested in Bitcoin and a small amount of money invested in gold, and I think that's completely reasonable. But I never went for cool, and that's the same reason I played so few live tournaments, is that, like, what's going to make me consistent profits? What's my best I'm not looking for a huge $1 million score. I'm looking to move up day by day and slowly build on that. I think that's the best way to try to approach both poker and something like trading, is that you can't swing for the fences, at least, especially at the very beginning. If you finally become convinced of something, you can swing for the fences, but you have to understand what that entails.
Now, I want to talk just a little bit about kind of the psychology of money, because I've, read a lot and experienced a lot with traders where maybe they cut trades short or, they just do various things. And it seems like it has something to do, with the money. And of course, we know that losing money hurts far more than, winning money does. Have you seen any of that in your experience as a trader?
Yeah, obviously the money you're losing or gaining is going to affect it. But, if a trade's really going that far against you, it's worth reevaluating. And if you're convinced about it, and this is one of the big reasons you have risk parameters. If you really like a trade, you shouldn't put on as much money as you're willing to risk at the very beginning of that trade. You could put on a quarter of that money and then say, okay, these are the limits to where I'll add on to this trade if I'm still convinced of the fundamentals. So you lose $10,000 and the trade is cheaper now. So it's cheaper for you to add on to this trade than it was before. But you should take a step back and say, okay, why has my trade lost me $10,000? Should I put the next capital investment on here? Are the fundamentals still telling me this is the right trade to put on? So I think that the factors of money really come into play when you've done improper bankroll management, because anytime you put a trade on, you should have a stop point, an exit point, and you should have a point where you're both willing to add on and take off the trade.
And is that something you see as a weakness in some of your colleagues or people you've met who are trading who don't quite see it in that same way as you?
I mean, I think it's a weakness in myself and everyone else as well, that occasionally you'll get to a trade where you'll say, this is my stop loss point and I should exit here. But if you're still convinced of your trade, you don't want to take it off. And it can be a weakness, but can be a huge boon when you don't exit the trade at its lowest point. I am much more formulaic and kind of systematic with the rules than some of my colleagues, but I don't necessarily think that's an advantage in the long run, but it definitely allows me, there's a little more freedom and there's a little less questioning myself involved with that. But I think that there's definitely an advantage to go both ways. But if you're not a long-time trader, I think that your instincts that I should continue in this losing trade are going to be far worse than some people who've done this professionally for 7 years, and maybe they've lost, similar to a poker player who has had a very bad year, and they can look back in their poker tracker and say, oh, a lot of this was luck, a lot of this was losing flips at key times in tournaments. I'm still profitable in these tournaments, so I'm going to keep playing. As opposed to somebody who's just played all these tournaments and has no record of them and says, no, I think I'm still winning. So I think that's the big difference here, is that I still feel a little behind in trading, where I don't have the track record built up yet, where I'm like extremely confident to say, I reached my stop loss point, but I'm still convinced in this trade that I should stay in it.
Now, what about tilt? Do you see tilt at the office? And if you do, how is it different than what you saw at the poker table?
Tilt at the office can be very similar at the poker table. You can lose confidence in your trade decision making. You can lose confidence in whether or not a trade opportunity will be available. You can start to make bad decisions or add on to a bad trade you didn't want to add on to because you're frustrated with it and you're just like, this shouldn't be happening. There's definitely a large tilt factor in trading as well. And it's important to be able to step back from it and just say, well, this has happened. I did not think this could happen. Have to get some objectivity on it. I remember the first time I had a trade, just really like the first time I saw volatility drop or go up so dramatically in the matter of an hour and a half, so that a trade that usually takes a day or a week to lose $20,000 was gone in an hour. And I know the first time I dealt with that, I was just not in my element. I was not making trades because I didn't feel confident in my decision making. I had never been in an environment like that before. So I like to think that I took the correct reaction to tilt, that, okay, I don't know what this environment's like. I can't apply the same trading rules I was to this new game. But now that I've been in that environment a couple of times, I am more confident to where I feel like the tilt doesn't affect me. I say, okay, this is the direction things are going. I have to go with the direction. Even if I think it's inappropriate, you can't fight the entire market. I don't know if that directly relates to poker, but if you tilt while trading, you can continue to snowball your bad decisions, just like with a poker session.
One day can end up very expensive in both.
Yeah, that's absolutely the case.
Well, Adam, thank you so much for coming on the show and talking about trading and poker and the similarities there. Is there anywhere people can follow you on Twitter or?
Yeah, I'm on Twitter at Squee451. I don't have a big social media presence. I'm not allowed to discuss any actual trading advice where my expertise could be helpful. So it's not as interesting as I wish it could be. But yeah, you can find me there.
They can hear about you winning the World Series this year.
Yeah, maybe.
Well, that's unfortunate. I was definitely going to hit you up for some trading tips, but now I understand. I'll just stick with my index funds and call it good.
That anytime anyone asks me for investing advice, I will tell them the Vanguard brokerage funds that I think are the best. And that's, okay. I'm happy to, if anyone wants to know, I'd be happy to post those recommendations.
This is making me feel good because that's where my money is.
Oh, you're doing great. You're way ahead. You're way ahead of the average poker player.
You're ahead of the curve. He's got the gold under the bed.
Yeah.
Excellent. Well, that's awesome. Cheers for coming on, Adam.
Thank you.
Thanks a lot, guys. It was a pleasure.
Thanks, man. Bye.
Talk soon. Bye.
So very interesting stuff having Adam on the show there. So giving some of those secrets away from Wall Street.
Well, I don't know about you, but I'm kind of thinking if I ever wanted to be a trader, I'm not sure I do anymore because it sounds really intense.
Yeah, I mean, it certainly sounds like it's obviously very, very serious. I mean, I've worked with quite a few traders, and it's interesting seeing the parallels with poker. It's to some extent almost seems like moving up to the next stake up in poker, especially if you end up in one of those large firms in terms of the work needed, the effort, the pressure, and those sorts of things.
You know, what's interesting, though, is listening to him talk, I was thinking, you know what, if poker players applied a lot of the stuff to poker, like approach it like you're a trader and really do the preparation, really do the research, really do the bankroll management, look for those, super good opportunities, but be balanced in your positions. Like everything he was saying, I was like, you know what, if you applied that to poker, I think it would really improve your poker.
And it's not surprising that he had a successful poker career. I mean, I think we discussed it last episode when we were talking with Yordoom, the idea of looking for the softest game, looking for the biggest return on investment. And again, that was key in Adam's success. He's looked for those really high value tournaments and not necessarily gone for the ego tournament, but gone for the one that's going to print him the most money. And that's something I really recommend to guys I work with. That look for the best game around. You can play the guys who are great, but play them very infrequently and make sure it's truly a session where you're choosing to learn if you want to be doing that, but it certainly shouldn't be your bread and butter.
And the thing of it is, when he's saying, oh, I can play an $11 tournament, and I know for every $11 tournament, I'm making $33. Guys, you are printing money if you're doing that, right? You could never get that kind of return in the stock market, or it'd be very difficult. I guess you could, right?
Yeah, not consistently.
Yeah, so it's like print that money by doing great game selection.
Yeah, and then all of the other things you're mentioning. The research is obviously effectively just studying poker. Make sure you're working those hours. If you're not studying, you don't deserve to win. The guys out there making a lot of money are putting a lot of hours in off the tables. So make sure that you're doing your fair share.
And one other thing he said, or at least I wrote this down, always be reevaluating. And for example, he said, go over in your mind, why would my trade have lost me $10,000? And you should do that with the hands. Go back over it and go, well, why did that hand lose me X amount of dollars? Instead of just saying, oh, well, I got unlucky, which maybe you did. But, what were the fundamentals underlying that caused me to have that loss or even that win? Because sometimes we win and it wasn't
a good play.
Right. It was through our own dumb luck. I know I've done that before. So, really taking that very objective stance and evaluating, I thought that was really important.
A ton of good material there. So, Tricia, where can people find out about you?
You can follow me on Twitter at Dr. Tricia Cardner, or you can go to my website, www.drtriciacardner.com.
And if you want to check out my services, go to pokermindcoach.com. On there, you can find my MP3s, or you can book in a free consultation for my sessions. We'll talk to you next week.
Bye, guys.
You've been listening to the Mindset Advantage podcast with Elliot Rowe and Dr. Tricia Gardner. To get any resources mentioned in the episode or to listen to past shows, visit pokermindcoach.com/TMA podcast. Thanks for listening.